Hi, I'm Justin Lazzaro. I'm a former retail loan officer. Now I'm a team lead at Lending Heights. Before I came to Lending Heights, I didn't realize how much technology there was in the broker space. I just assumed that these retail companies had all this money, thus could invest all this money into tech. Coming to Lending Heights, I was kind of blown away with all the tech that we had to offer. From anything from the tech that allows us to get same-day underwriting approvals, clear to closes within 7 days. We just have it made over here at Lending Heights in the broker space.
Correct me if I'm wrong, but a common misconception, when you're not educated in mortgage broker space, you have zero control. Is that true?
I think it's the opposite. I think when I worked at the bank or when I worked at a retail lender, I think I had less control because you only had one company to send conventional loans to, one company to send FHA loans to, and one company to send anything else to. Now in the broker space, we have multiple different lenders. So if one company is not doing it for me pricing-wise or service-wise or underwriting-wise, I have all these other lenders to choose from.
You being a very educated person, I'm sure you did your due diligence and you were shopping around. What differentiated Lending Heights from other mortgage brokers in the area?
So I think it's a confidence I have in our leadership to hire the best of the best processing, the best of the best closing, versus other companies in the area. They have centralized operations that aren't even in the Pittsburgh area, so there's not that same kind of level of trust. I think at Lending Heights, working with people that are local, I can see my processors, I can see my closers, I can talk offline or outside of work hours and try to get stuff done because I think we all have the same mission, give the highest level of service to every single customer, and we really knock it out of the park there.
How would you compare your compensation from the retail model to the broker model?
So I think the confusing bit is there's always a way to adjust your compensation based on your interest rates. So a lot of companies that are offering these super high compensation packages, 150 basis points, 200 basis points, what they're not telling the loan officers is that their pricing is taking a hit because of it. A lot of times people think they're getting the lowest rate in the highest comp, and that's just not the case. At Lending Heights, after shopping around, for a company that could, kind of do both, because obviously as a loan officer, you want to have the highest comp and the lowest rates. Lending Heights had the best of the bunch. I was able to come here and immediately make 120 basis points per loan and have pricing that was smoking a lot of the competitors in the area.
Coming into the broker space, how has your outlook changed on how you're compensated here versus in the retail model?
So I think in the retail model, they tell you that, you have to keep your comp low in order to be competitive. Coming over to the broker space, I kind of learned about margins. The retail space and bank space, they don't tell you anything about margins. You don't even know what their margins are. In the broker space, it's all out in the open. Our leadership is very honest with us on how we set our margins. And thus, they're very honest with how much of a percentage we get, as far as our compensation based on those margins. So in other words, we have a lot of control here at Lending Heights. We can set our own comp. We can also set our own comp in relation to the pricing, but you don't need to have low comp to have low rates here. They're not mutually exclusive of one another.
It's a common misconception in the broker space. Things are scattered. You have, you have to go to one place to do one thing. You have to go to another place to do anything, nothing. Once you get to Lending Heights, is that how it is?
As it pertains to not having a centralized place, I think that gives us a lot of control in that, we have our lenders that can close, really quickly. We have our lenders that can take the tough deals or better on the bad credit or non-QM type of stuff or government loans or whatever. We have that control. I think the biggest misconception in the broker space is, you're going to waste all your time learning all these different processes and learning, how every lender kind of does business. And the cool thing about Lending Heights is our leadership and our processors make that extremely easy for us. We have one LOS that takes all the applications, and then the processing team and the back-end operations teams take that, lock in the loan with those specific lenders, and then it's not like you're actually logging into that lender system to do anything yourself. Everything's kind of taken off my plate as a loan officer, where all I really have to do is take a crystal clean loan application right up front and submit the processing, and bam, you're done.
Communication with your loan team. How do you feel between the processors, between appraisal orders, between LOAs, between underwriters? Do you feel there's, are you able to communicate with the production team?
As far as communication goes, we do have a lot of automated processes here at Lending Heights where we get automated emails and text messages that let us know where we're at in the process. But at the same time, the benefit of having a local company and kind of having leadership and operations people that I know is I can reach out at any time. So no matter how good of a process you have, I mean, I'm very hands-on. You can be as hands-on or hands-off as you want. I'm more of a hands-on person, so I like to have weekly meetings with my team to see how the pipeline's moving, make sure that there's not any hurdles that we're kind of getting stuck at. But at the same time, processing team and closing and leadership, they're all trained to reach out to us when there's a major issue, which this is mortgage. Unfortunately, not every deal is as smooth as we want it to be. Unfortunately, sometimes there's something that happens with the appraisal process or title or something else. The cool thing about our ops team is they're jumping on it right away, and they're only getting the loan officer involved when they absolutely need to. One of the things I was told from the retail channel when I was there is if you go to the broker channel, you're never going to be able to get a hold of your underwriting team. That's not true. My first experience here at Lending Heights, I sent a loan over to United Wholesale Mortgage. There was a discrepancy on one of the conditions. I had a question on it. I picked up the phone. I called the underwriter right away, fully expecting them not to answer, because that's what I've kind of had in the past at past companies. Little be known, they answered right away. They explained everything to me, and I had the condition cleared in a matter of minutes just by explaining things over the phone. That is a huge game changer. There's no more back and forth. Oh, we have to wait a week to submit everything back to underwriting before we can hear back on this one condition. The cool thing about the broker space is this communication aspect allows us to move very efficiently through the process and not have to wait for more documentation, or we're limited by submissions to underwriting. It's not like that here.
Coming from large retail companies with big marketing budgets and big marketing departments, how does marketing at a retail company compare to marketing here?
So marketing at a retail company, they're really focused on their brand and marketing themselves. So they don't allow you to have personal websites. They don't allow you, they're very limited in what marketing flyers that you can release and what you can post on Facebook. In the broker space and at Lending Heights, it's not like that. Our owner, Jason Checo, is really big on allowing us to build our own brand. So with that, I have my own website now. I have my own personal logo. I have my own flyers that are made for me. And with that too, some of our lenders have social media calendars that are automated posting every single day done for me. So a lot of these lenders and a lot of these retail banks that say if you go to the broker space, there's going to be no marketing. It's the furthest thing from the truth. I think if you're at those companies, that is more true because you have no marketing on the individual level. All your marketing's on the big company level.
Did you have to pay for your marketing at the retail place, or do you have to pay now?
At my last company, they charged me $50 a month to have a marketing team post for me. It's been a change here at Lending Heights because now it's completely free. I have access to more marketing pieces, and I have a company that's posting every single day for free for me.